Auditing, right? Auditing, chapter 11. This is week 4 of our online session, and we're dealing with kind of wrapping the audit up. I need my textbook. Got it right here. First off, let's quick reminder that we, obviously as Christians should be praying for those affected by COVID, obviously. A lot of Americans have lost family members from this virus, and we obviously want to pray for their families going through a time of grief. I've been through it twice. Both my parents passed. I know how difficult it is to lose loved ones. Maybe you have, maybe you haven't at this point in your life. It's difficult, right? It's difficult. So let's make sure we think about those people that are grieving, or even those that are still struggling, trying to recover from this virus, right? So add them to your prayers, lift them up, and see what we can do to help. Also, obviously, not all of us, but a lot of us are from South Carolina, and we know that South Carolina got hit pretty hard with some storms. Sunday night, I know I live right behind a fire station, and at about 4 in the morning, the air raid siren started going off because there was tornado warnings, right? So obviously it was scary, but I wasn't too worried. But other people, there were some people that passed from that. Some people lost everything, and the good thing about losing possessions, it does hurt, but they're replaceable, right? The loved ones are not. Cars and houses and stuff will definitely affect you in the short term, but ultimately those are minor in the long term, right? So pray for those also. We want to pray for those that are struggling, recovering from the storm. I know some students that are without power. They say they've reached out to me saying they don't have power, and they're not supposed to have it back until sometime tomorrow is when they're estimating it back. Hopefully they'll be before that, but if not, I'll definitely work with them however I can to make sure they're have ample time to complete assignments. One thing I'm going to get ready to do, let me do it right now. So I'm going to go in here to connect, and let's just change all these dates, all these due dates. Now these ones that are on the sign, obviously you can't see them yet, the ones that are in yellow, like even the final down there. We're just going to make all these due dates 27th. Okay, so that'll give you Learn Smart. Active Learn Starts can't be. What is this? Oh, I don't want to start date. I want to do the due date. Cancel that. Here we go. So now anything you've missed, you can now go in there and do. Okay, if it's a Learn Smart, you'll need to recharge it. But ultimately, that's good. So that's Monday. Okay, that is Monday of exam week, right? Well, what would be exam week. Now, I'll probably have the final will be due like the 29th at midnight, and then on that Thursday is when I plan on calculating all final grades. So ultimately, after the 27th, none of that stuff will be able to be turned in. Okay, so if you've missed something, whether it was due to absent-mindedness or no Wi-Fi or sports back into spring, okay, you can go back and do it now. Get it done, okay? So, and also I had a student reach out to me about figuring out what their grade is. I need to do some updating, and I'll do that before I move on to government. It might be the government session might not start till like 1 o'clock because I want to get it all caught up. Okay. Real quick devotion from Jimmy. We'll just leave his name as Jimmy from Virginia. It's very short today. Let's see how it goes. I left the Good Friday service that afternoon with the heavy burdens, for I was thinking about 3 close friends I had recently lost. As I continued to carry my burdens of grief that Saturday, I tried to convince myself that I felt better, but to no avail. Then on Easter Sunday morning, my mental state completely changed. Remembering that Jesus rose from the grave helped me rise above my feelings. After all, Jesus is missing from the grave, but not from my life. Since I'm still among the living here on earth, I have resolved to do more seeking of Jesus as the risen Savior. That is my prayer today, that you will too. Very good. Thank you, Jimmy. Okay, get your work in. Let's get it done. Let's wrap this semester up. Hopefully, some of you I might not see again. Hopefully, you'll reach out to me through email or phone messages or whatever. And some of you, I'll get the privilege of seeing again in the fall once we hopefully are free of this current epidemic. So let's make ourselves a little smaller over here, and let's pull the book up. Very good. Chapter 11. Okay, Chapter 11 is completing the audit. So we're in a wrap-up phase now, okay? So Chapter 11 is completing the audit. Chapter 12 is the audit reports, which we'll get into that flow chart I talked about if you have issues, follow the flow chart to get the correct opinion. So we can deal with that next chapter. Here's our 6 learning objectives of the chapter. What we got here? First one, identify major activities performed by auditors in completing the substantive procedures following the date of the statements. Okay, number 2, attorney letters, okay, and what they do and what they mean. Number 3, written representations. That's another document. We'll discuss that when we get to it. Identify the final steps. Okay, then something about subsequent events and subsequent events and subsequently discovered facts. There we go. And number 6, identifying important activities and communications following the completion of the audit and the auditor's report release date. All right, very good, perfect. Now, let's move on to that first objective. At least the first 4 objectives are going to be contained in this next page, I believe. Well, not quite. Let's get to it. All right, let's look at the timeline real quick. This chart here, I usually show in my PowerPoints when I do them in class. You see here, so if we're talking about an audit, this is an audit timeline. So here's the beginning of the fiscal year that we're going to audit. Okay, and then here is the end of the year for the year that we're going to audit. Okay, so this right here is the year that the company was in business. So it's the year 2017. Okay, we might do some interim testing between these 2 lines. Okay, but typically, even if we do, we got to come back right in here right after year end and kind of finish those tests up. Now, so here we got a couple dates here at the end. We got the year-end date, obviously. This is the end of the year, okay? And then when the audit's complete, that's when you'll date the auditor's report. And then sometime thereafter, usually it's fairly close, is when the audit report is released. Usually it's presented to like the board of directors or if it's a government audit, the county council, city council, okay? Hopefully not too far after the completion date, okay? And so you see here, at the year end, this stuff is what we're kind of talking about here. The letter, the attorney letter, the completing the procedures, the written representation. We'll talk about going concern here in a few minutes. Adjusting entries if we recommend them. Audit, documentation review, and then subsequent events, okay? And then this small lag time here from completion to release is where we got this subsequently discovered facts, okay? Now, let's see. Where's that? Here we go. So here's objective 11.1, okay? So we're going to identify major activities performed by the auditor in completing the substantive procedures following the financial statements, all right? So looking here, okay, they got some stuff here called roll forward, okay? That's kind of like if we come in the interim and we do some work, we want to roll it forward to the end of the year, kind of do that last little bit. At least that's what I think. Let's double check here. Oh, here we go. Simply, although most inventory observations occur near year end, they can actually be done at a earlier time. In such cases, we'll use a roll forward procedure to roll them forward to the year-end date. So I was pretty close to the mark there. Very good. Now, also, we'll do analytical procedures. And I did mention this previous in the course. When we talk about analytical procedures, I tend to think about it in terms of budget actual or year-to-year comparisons. Remember, I did say this earlier, but there's 2 times that are required. Once is at the beginning when you're doing the planning, and then once at the end when you're doing the wrap-up. Now, you can use them in the middle, but it says here right here on the screen, right? Optional. So at the beginning, they're required. And in the middle, they're optional. Or during the audit, they're optional. Analytical procedures are. And then at the end, they are required. Okay? So analytical procedures would be required in the closing phase. Okay, sorry, a little stretch there. Here's some reviewing of the accounting estimates. Again, it's not about them being the way you would do them. It's about how, are they fair? Or would people, how do I want to say it? It's not about how you would do the estimates, but it's how would most people think the way that they are doing them is fair, okay? But anyway, so here's some, it says Best Buy. Who goes to Best Buy anymore, right? I just go to Amazon. But anyway, Best Buy, we know that they sell electronics and home office products and appliances. Identifies the following as some of their critical accounting estimates necessary for preparing the financial statements. Okay, future markdown and loss reserves for valuing its inventory. Future cash flows from long-lived assets for evaluating potential impairment. Okay, sales returns for recognized net revenues. This bottom one, gift card usage for determining revenue earned from the sale of gift cards. We all know that. I know I've gotten gift cards and lost them or never used them and probably ended up throwing them away because I didn't know they were still good. Who knows? That's why I hate gift cards, right? I always forget to use them. If I get them, I try to use them right now because I don't want to forget about it. Okay, anyway, so that's the first 3 things we would do. The first 3 things identified in the book is the roll forward procedures that need to be rolled forward. Okay, analytical review, analytical procedures review, and then finally reviewing the accounting estimates. Okay, so that's that first. What do you call it? The first learning objective, right? So, you want to use one of these questions? What do we see here? Yeah, let's use 11.3. So, our question number 1 for our discussion board, which I don't have it up yet, it will shortly, is 11.3. How are analytical procedures used near the end of the audit? You should be able to find it up there above. I'll let you do the work, okay? I'm a mean guy. Okay, so your first question is 11.3. How are analytical procedures used near the end of the audit? Okay? Part 2. Our learning objective 2 is the attorney letter. Okay, so what we're looking for here is essentially we're trying to see if there needs to be any liabilities dealing with potential litigation claims and assessments, okay? And that's where the attorney letter comes into place. It says, what do we say here? For financial statements to be presented according to applicable financial report frameworks, GAAP, all material contingencies must be properly accounted for and disclosed in the financial statement. So this is one of those P&D areas, right? So we want to make sure that the disclosure of any possible losses, it says gains too, but typically we're talking more about losses, are disclosed properly as they need to be, okay? What's in my eye there, all right? So here we go. This is what I'm talking about here. So a contingent liability that requires special consideration by auditors is the uncertain outcome of litigations, claims, and assessments pending against the entity, okay? And so if there may be the reason that we would go to the attorneys or the lawyers It's because they would have knowledge of these litigations, claims, and assessments. Okay. So from our auditor's standpoint, there's two important issues. One is that they have been disclosed, and two is that they are properly presented. Okay, they've been disclosed to us, and they've been disclosed and presented in the statements. All right, that's our biggest concern. So here it says auditors should inquire. So that's the first thing we'll do is we'll ask management. Okay. To discuss the potential litigation claims and assessments. Once this inquiry has been identified, litigations, claims, auditor, and assessments. Once the inquiry has identified litigation, claims, and assessments, the auditors will do the following. Okay, obtain from management a description, examine documents, obtain assurance from management that it has disclosed all the material unasserted claims. Read the minutes, read loan contracts, loan agreements, leases, and then review the legal expense account, cash disbursement records, and any payments for legal services. Okay. We also hear when the auditors assess the risk of material statement from when auditors assess a risk of material misstatement from pending claims, they will request a attorney letter to all attorneys who worked for the client during the year under audit. Okay, and so here is a sample attorney letter. Okay, let me try to read this first paragraph. It's pretty small. Can I make it bigger? Yeah, I can. Nice. Let's look at this first paragraph. Now, again, this is. We have management prepare it, okay? So it's prepared by management, not by the auditors. Now we might do a lot of it for them and have them sign it, but it's probably a standard kind of copy pasted for the most part, except for where here it is in the brackets where you would put in the stuff that you found and stuff you've been made aware of through inquiry. Anyway, let's read this first paragraph real quick. In connection with an audit of our financial statements, remember this is the management speaking, for the year end, we have prepared a description and an evaluation of certain contingencies, including those set forth below, involving matters with respect to which you have been engaged and to which you have devoted substantive attention on behalf of us in the form of legal consultation and representation. These are regarded by management as material for its purpose. Your response should include matters that existed at the year end and during the period from that date to the date of your response. All right. So we're just trying to gain better understanding of what they might be dealing with, and if we need to worry about, okay, well, this is kind of where you get into the whole realm of probable, questionable, how likely it is that they will actually suffer loss can have different impacts on how we need to present it, disclose it. So here's kind of the cycle here. Excuse me. We start here, number one, obviously, we request that the client prepares the letter. The auditor send it. The attorney will get the letter and then also provide a return each response. Okay. So here is this is a nice little chart to review the role of the parties in the audit of litigation claims and assessments. Okay, the auditors need to inquire management, perform various procedures like examining that legal. Hey man, I'm doing a little bit of teaching here, trying to at least. VX or VG, I haven't talked to you in a while, or FX. But anyway, where am I going here? So these are responsibilities of the auditor: inquire, perform various procedures like examining the litigation accounts or the legal expense accounts. Initiate request the lawyer attorney letter, and then also mail it. Okay, and so you can read the rest of them about the client's duty, and also the attorney's one is obviously is to respond to it. Okay, so that's check. That's point 2, or alert objective 2 is talking about that the lawyer's letter or the attorney's letter. Part 3 is obtaining written representations. Okay, and this is kind of a I don't know. I don't know what kind of terminology I want to hear here. It's kind of like a put it all back on management. Okay. So that's kind of the purpose of the written representations to me, which is either called the management representations or the client representations, is essentially to make sure that the client knows that essentially it's all their responsibility. Our responsibility is to do the audit. Their responsibility is to do everything else. Okay, is what it kind of comes down to. So easy. I got a dog over here. Are you having trouble with that? Oh, goodness. Okay. So, okay. Yeah. Professional standards require that we obtain this written representations, okay, to confirm certain matters and support other evidence obtained during the audit. The representation takes form of a letter on the client's letterhead addressed to the auditors and signed by the responsible officers of the company. These representations are dated as the date of the auditor's report, which is when the audit is completed. Okay, thus representations cover events and representations running beyond the date of the financial statements. Okay, what are you doing? Come on, Lily. Alright, we got a dog over here. Can you see her? Lily. I'm wearing shorts. We're supposed to see that. Alright. Let's get this back to the right spot. Alright, anyway. So, okay, here's the representations are organized into 3 sections. Here they are. Okay, the entity's financial statements, including management's responsibility. Okay, in other words, management is responsible for the statements and internal control over all the financial reporting. Also, management's responsible for appropriate disclosure, presentation, reasonableness. Okay, and also the third bullet point there. Statement that uncorrected misstatements are immaterial. So if we find immaterial misstatements, okay, they know about it. And taken as a whole, they're immaterial. We're not going to worry about it. The second part there is that information provided to the auditors, both the management is responsible for the information provided to us. Then finally, management is responsible for internal control over the financial reporting process. So here's a sample written representation letter. Let's look at the first paragraph. This representation letter is provided in connection with an audit, which comprises the balance sheet and then the other statements. Here we go. Certain representations in this letter are described as being limited to matters that are material. Items are considered material regardless of size if they involve a omission or misstatement of accounting information that, in light of surrounding circumstances, makes it probable that the judgment of the responsible person relying on the information would be changed. Okay, so essentially, if it would alter your opinion of the company, it's material. But okay, anyway. Read down through or have a look at the letter here. Essentially, we're trying to make sure that it's like we do this in the engagement process, saying that we're going to do the audit, management's responsible for all the other stuff, but we're kind of doing it again at the end just to reconfirm that hey, we did the audit and everything else is your responsibility. It's kind of doing it. It feels to me like it's doing it again, but it's not necessarily doing it. But it is kind of that. To reconfirm that everything except the audit, the opinions that we give, is the responsibility of management. Okay. 11.4, identify the final steps in completion of an audit. Okay, so the first thing you see here is the ability to continue as a going concern. If you go all the way back to your freshman year when you did Principles of Accounting 1, okay, one of the assumptions that we use, there's 4 assumptions, right? The first one is time period assumption. There's also, I think there's a cost benefit in there. I can't remember y'all. I can't remember them. But one of those is going concern assumption. Essentially, that the business is going to continue into the future, kind of forever. Okay. Now, obviously, if it's losing money, it's going to stop going into the future. Somebody's going to say, "Why do it no more? I'm losing money." But and that's that going concern assumption. So, if you have a concern that the company will not be able to continue into the future, it's a pretty big deal, right? And if the auditor feels strong enough about it, using professional judgment, that they doubt the company will continue to go forward in the future, or in the very near future, then we have to question. It's a going concern, an opinion that they will not be able to continue in the near future. So here we go. And auditors gather information throughout the engagement that they may encounter information that raises questions as the client's ability to continue as a going concern. And it's all these 4 bullet points. Okay, they're pretty good. You should review them. Negative trends. Okay, operating losses, capital deficiencies. Look at this last one. That's huge, right? If you have negative cash flows from operations, you're not doing very good, right? We all should know that, just from our accounting knowledge. But look over those, and if it's to a point where we're pretty certain they're going to go under, then we would have to attach that opinion or that wording to our opinion, okay? And that's a pretty big deal. And I remember back when I had a master's program, the professor said it's essentially a kiss of death for the company, because it's going to make anybody's thought of investing in that company kind of go away, because now they don't think they're going to keep going along. So let's either pull our money out or kind of jump ship, and then it's a self-fulfilling prophecy at that point. Let's see what it says here. All right, so if we feel there is a going concern issue, okay, then before we put it out there, okay, we want to give management a chance to show us or tell us what they're going to do to continue going forward, okay? So let's look at this paragraph here. If the auditor's evaluation suggests going concern uncertainties, auditors should obtain information about management's plans to mitigate the effect of these factors and assess the likelihood that these plans can effectively be implemented. I read that a little backwards, but you get an idea. For example, clients may have the ability to delay or reduce expenditures, restructure existing debt on more favorable terms, access additional sources of financing. Okay? If so, these actions would allow the client to continue in operations. Auditors may conclude that the likelihood of going concern uncertainties is low. In this instance, auditors would likely conclude that substantial doubt about going concern does not exist, and no further financial statement discoveries or modifications to the report would be necessary. Okay, that's a great paragraph to kind of reread. I'm going to highlight it for you here in my book. That's a great paragraph right there. Okay, and let's go ahead and double highlight there that whole does not exist. All right. All right. Do I like these? Yeah, let's do 11:15 as our second question of the week. All right. So, our second question of the week: what action should auditors take if evidence suggests that substantial doubt exists about the client's ability to continue as a going concern? Okay, that's your second question of the week. I'll have that up as soon as I conclude here. Okay. All right, and let's kind of get through this. Where's my next? Here's part 5. Responsibility for subsequent events and subsequently discovered facts. Okay, remember that the subsequent events are from the year end until we finish the audit, and the subsequently discovered facts is from the conclusion of the audit to the issuance of the report. Okay. It's essentially, if we find any, we'll issue a addendum, if you will, to the report, and it'll have a separate little date. Okay, what does it say here? Where was I read this a little bit ago. Let's see. Events occurring between the date of the statements and the date of the audit report are called subsequent events. The auditor's primary objective with respect to subsequent events is to ensure that any material events that affect the fairness of the statements and disclosures are properly identified and disclosed in the statements. Okay? Professional standards identify the 2 following types of subsequent events. Examples of these events from SEC filings are shown in the accompanying audit highlights here in the blue. Okay? The first one is events that provide additional evidence of the conditions that existed at the end of the end of the year. For example, the deteriorating financial condition of the customer that had large accounts receivable balance at the year end. Okay. Second one, events that provide evidence of conditions that arose following the year end. For example, a major acquisition occurred after the date of the statements. Okay, so there's our 2 subsequent events. Ones that happened before year end and ones that happened right after year end. That was tough, right? All right. And then down here, subsequently discovered facts. We assume, let's see what it says. Let's go. The auditor's response to subsequently discovered facts depends on when they are identified. In some circumstances, the auditor can learn of these facts after the date of the auditor's report, but prior to the release of the report. The issues that this raises for the auditors is that auditing procedures have been performed only through the date of the auditor's report, yet these facts are discovered prior to the release of the report. As a result, the statements, the report could still be revised prior to issuance. If these facts require revision of the statements, the auditor should perform additional procedures and evaluate appropriateness of the disclosures of these events. Okay, so we won't worry about this here too much. One option would be to do so and change the date of the report to affect a new date. However, a disadvantage of this approach is that the auditor's responsibility for all events is now extended to this later date. Okay, we won't worry about this too terribly much. Review it. Okay, we can't. At some point, we got to kind of draw a line and issue the report. We can't keep extending because we find new stuff. Again, review this right here. It's pretty good. Okay. I think this is the last one. I hope it is. Let's see. Responsibility following the report release date. Okay, so one thing in here, the biggest thing in here is the management letter. Okay, here it is. So, look what it says. This letter is... It's a way to add value to the audit. Okay, I think my box is in the way over here. I'm sorry. There we go. It's probably been there the whole way. All right, so the auditor can write issue a letter, or let's take a letter of recommendations. A letter of things that we found that we think that you can improve on, And hopefully they'll, if say, wow, these auditors found this stuff, we implement them and stuff got better, so we're going to continue to use that auditor. It can kind of be a way to help maintain clients. So management letters are not required by GAS, but they are considered an important method of adding value to clients beyond that provided in the audit examination. Okay, some firms encourage consulting and tax professionals to participate in preparing these letters. Okay, it is a value-added service, and hopefully you'll make them want to come back. Right? You need to. No, you don't. All right. Let's see. Let's wrap this thing up. Right. So here, well, that's pretty much the rest of the chapter. So let's go ahead and look at some of these questions here. I want to go to student view. I'm going to do some questions, auditing questions. Then I'll get this thing put up on YouTube for you guys to do your work later. All right, completing the audit. Chapter 11. All right. Well, yeah, what it is I'm doing, I could probably do it a different way, but the way I know to do it is I can stream it on Twitch. I can download it and upload it to YouTube, and then the students can look at it later. So that's kind of what I'm doing. This is actually auditing, which is part of auditing, part of accounting, right? All right. So again, let's go through these 10 questions real quick, and then we will. I'll get it uploaded for you guys, and also I gotta do some work. I gotta get your quiz loaded up there, and also get your grades updated. So that'll be coming out here soon. So, question number 1. A major objective of the written representations. And again, that management, we want to get management to make sure they know that they're responsible for everything except for the opinions that we give as auditors, okay? So this one looks pretty good. Shift responsibility for the statements to the management no, not to the auditors. We want it to be the other way around, from auditors to the management, right? Provide management an opportunity to make assertions. Okay, that's not it. Provide a substitute source of audit evidence. Now, here it is. Impress on management its ultimate responsibility for the statements and disclosures. Again, it's not our responsibility. It's management's. It's the people that we're auditing. The statements are their responsibility, not ours. Our responsibility as an auditor is to give an opinion. It's their responsibility to present them fairly, okay? So the correct answer would be number 4 here. Let me check it. I don't want to make a mistake. There we go. So number 2. Which of these substantive procedures is not used to obtain evidence about contingencies? Okay, remember we're trying to figure out, do you have any undisclosed litigation coming out that might impact the financial statements? Okay. So scanning expense accounts for credit entries, that would be more of a misclassification thing, not so much for contingencies about legal problems. Number 2, obtaining a letter from an attorney, we would definitely do that. Read the minutes, that would be where it would be contained as well. In examining the terms of sale in a sales contract, that could also have contingencies as well. So it looks to me like scanning the expense accounts for credit entries, okay, that's probably going to give us more of a misclassification than anything else. And I think that's going to be our best choice. Let's see. Which of the substantive procedures is not used to obtain evidence about contingencies? I think it's going to be that one. Let me check it. There we go. So, but the other 3 will, right? The lawyer will say, hey, we got these contingencies out there. They'll be discussed in the minutes of the meetings. And also, the sales contracts could have, like, contingencies as well. All right, good. Number 3. I was a little shaky about that one. All right, A. Griffin audited the statements of Dodger Magnificent, whatever, Corporation She completed gathering sufficient appropriate evidence on January 30th, and later learned that the stock split was on the 5th of February. So that would be a subsequent event. Subsequently discovered fact, right? The following statements were changed to reflect the split, and she now needs to dual date the report. Okay. So she gathered sufficient evidence on the 30th, so that is the end of the audit field work, and that will be the date of the report. That's when she'll want to date the report. Okay. So January, what is this? Yeah. So it should be dated January 30th. The subsequent event will have a separate date. That's note X of the 5th. So here's the only right answer. This is actually pretty easy because I think it is. Let's check my work. Yeah. And the only possible year-end date there is the 30th. That's when you complete the audit work. That's the date of the report. Very easy. Very good. Usually it's not that way. You get the two Decembers. Well, it's got to be one of these two, right? So we're trying to figure it out, but no, it's not. Very good. Auditors have responsibility related to management's disclosure of new information related to subsequent events until. Remember, subsequent events stop at the date of the audit concludes, okay? Which is the date of the auditor's report. Yeah. Uh-oh. Auditors have a responsibility related to management's disclosures of... Well, I said I got it wrong. Okay, so here it is. Auditors have a date up until the date of the auditor's report for subsequent events. And then from the auditor's report date until the release of the report, which would be the release date, they have responsibility for subsequently discovered facts. Okay, so I was stopping with just subsequent events as opposed to going the whole way until the release date of the report, which would be the small time period there for subsequently discovered facts. Okay, so there is our right answer. There we go. Number 5, auditing standards regarding subsequently discovered facts refers to knowledge obtained after. Subsequently discovered fact is after, I just said it right, after the date of the auditor's report. Okay. Number 6, which of the following is not required by GAS? Okay. This was highlighted specifically in the text. Okay, I highlighted for you the sentence with the highlighter, and that is the management letter. That is something that we would usually do after the fact to try to add value to the audit, and hopefully that they'll either want us for more services or they'll continue to want us to do the audit in the future. Okay? Let's go with the answer. It's correct. Go to number 7. Which of these persons does not participate in writing the management letter? Again, this is kind of that value-added letter, okay? It is for a way for the auditors to add value and making recommendations to management, okay? So the client's accounting and production managers, now a lot of this stuff is going to be addressed to them. Recommendations, stuff to implement. The public accounting firms, consulting and tax experts, that's actually in the reading. I actually read that out loud, I believe. So that's a part of it too. The public accounting's audit team, money engagement, of course they're involved. Now the outside attorney would have nothing to do with this. And that would be the correct answer, right? Number 8, which of the following is ordinarily performed last in the audit examination? Okay. Obtain written representations. That's towards the very end. Reviewing for subsequent events. That's pretty late as well. It's even later, right? Performing test of controls. That should have already been done. That's done early. Securing a signed engagement letter. That's at the very beginning. So it seems like the only reasonable answer here, these are kind of towards the end. This here is, after towards the very, very end, right? So performing review of subsequent events. No, that's not it. Maybe it's the written representations? Oh, I don't like that one. Wow. I have to go back and review that. This seems like it would be later than this, but evidently it's not. Okay. Let's see if they give us a readout down here. These would be obtained at the date of the auditor's report. Okay. Well, in the subsequent events, that would be not the report date, but at the conclusion of the audit work, right? So I was close. Definitely not these two, though. Which is an auditor's primary method to corroborate information on litigation, claims, and assessments? Primary method. Okay. Examine legal invoices by the attorney. Okay, that would give us some information. Reviewing the written representations from management. Okay. Verifying attorney-client privilege through interviews. That's inquiry. But down here, right? Reviewing the response of the audit, the legal letter, okay? The attorney's letter. So that's going to be our best source. Okay. Which of the following substantive procedures would auditors most likely perform to obtain evidence about the occurrence of subsequent events? Subsequent events, okay? Confirm bank accounts established after the date of the financial statements. I don't think I've ever heard that before. To send confirmations to vendors whom the client normally does business with, but for which no balance was noted. That's actually, we talked about that in that chapter. That's a pretty good thing to do. Recompute a sample of large dollar transactions occurring after the date of the statements for arithmetic accuracy. And then down here, investigate changes in shareholder equity occurring after the date of the financial statements. This here sounds pretty good. Okay. So, I mean, arithmetic accuracy, that's something that would be considered a part of the internal control process when we go in there. We check the controls. We know that if they got good controls, that shouldn't be an issue. There's nothing to worry about. And this is here something we would do as a normal audit work, okay? And then confirming bank accounts established after. I don't think that would, I don't necessarily know where that would be a big deal. So let's see what it says if it gives us any sort of a follow-up. This may provide information about sales and repurchases of entity stock. Okay, very good. Okay, so that's going to be our Chapter 11 discussion. I'm getting ready to prepare the Chapter 11 quiz. It'll be up shortly. Remember, I bumped the dates back for all this stuff. So anything that you haven't done, you can come in here and do. I'm going to update your grades as well. And I'll hopefully have that done within about 45 minutes. If you're anybody that's currently watching, it'll be about midday on Tuesday. Okay? All right, guys. If you need anything, reach out to me. God bless. And we'll do our last review, our last chapter next week, which will be, doing the audit reports. We'll see you next week.